This is Bazaar Morning Call, broadcasting live from the CNBC TV 18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. And I want to say, before I say good morning, introduce my co-anchors, etc., that we are getting ready to celebrate the 77th year of independence, 15th August, tomorrow. And I must say that we begin this with a renewed sense of optimism where, dare I say, even sky is not the limit. We are counting down to landing on the moon. Guys, morning.
Hi, good morning. And it's the kind of session you like, right? You come out of a holiday, you get into the holiday, you're feeling all patriotic. It just feels right and optimistic. I think that's the perfect way to summarize
it. Though we are feeling very, very good, I'll tell you what, the kids are feeling great because they're just going to go in today and they're going to get 2 days holidays. My son was thrilled out of, because they're dressed up in the Indian attire and they're saying, we are going today, but 2 days we're off. So, but, even though, not to forget, with all this independence celebration as well, we remember the great man today, Mr. Rakesh Jhunjhunwala. Yeah. First death anniversary, so strength to his family. And if you're looking for inspiration, well, today is the day, first death anniversary. Strength to his entire family, actually. The man who lived his life, investing in the stock markets and the biggest bull that we've ever seen in the Indian stock markets as well.
Always optimistic, always cheerful, never seen the man down. Yeah. And I think, as you said, Nigel, an inspiration, I think. And I think the newspapers this morning, yesterday, I think it's absolutely correct the way, tributes are flowing in and tributes are being paid. So I think we'll talk about this and the legacy and what from here and, the portfolio, of course, etc. It's, in a way, public information. All right, well, let's just kick off the day with what you need to know as we start another trading session, right? This is a new week. So let's begin with where we left off on Friday. On the market, we did not leave off on a pretty good note. Friday's fall is leading to some amount of nervousness, and I'll tell you why. Because global markets are also, in a way, looking a little sort of naughty. They're looking a little naughty with the K. They're looking a little out of sync. The Nasdaq ended about 0.56, 0.6 odd % lower on Friday. US Treasury yields are higher. So they went up. Dollar index is almost at 103 kind of levels. What this is doing is, and by the way, the Treasury yields are the problem. The dollar index rising is the sort of derivative of what's happening to Treasury yields, and it's kind of causing a fair bit of damage to currencies around the world, emerging market currencies around the world, which are facing the heat, which are under pressure. So I would say that the global setup perhaps is looking a little tricky as we start another session this morning. So Nifty, just to get back to levels and how you need to kind of approach this, it broke on Friday below the swing low of 19,467. So we broke that and we ended below it marginally, but we did that. Now, ideally, I would kind of say that we've got lots of supports coming in between the 19,300 to 19,400 level. This 100-point zone has got lots of supports. There's a 61.8% retracement of a rise. There is a important moving average. And there are Bollinger Bands, daily Bollinger Bands, etc. as well. So this 100-point range ideally should hold. If you are looking for one number, right, as a kind of a marker between what the market does over the next many sessions, I would go with the 40-day exponential moving average. That comes in at 19,352, bang in the middle of that 19,300 to 19,400 range. So, take that as a support, at least in the very near term. You get a close under it, and I think you'll start to see more downsides coming in. If this zone goes, the next supports only come in around the 19,150, 19,200 level. So again, all nearby, not very far away, but that's how things are looking right now. On the upside, we need to close above the 20-day moving average on the Nifty, which now stands at 19,657. So those are levels on the Nifty, both on the downside and upside. Bank Nifty broke just to kind of similar levels on the Bank Nifty, broke below the swing low of 44,513 on Friday. Here, the support for the Bank Nifty comes in at 43,933. Which is basically about 1%, 1.2% away from where we left off on Friday. On the way up, the Bank Nifty needs to close above the 40-hour exponential moving average, which comes in at 44,667. Here's the point. I would say this. You come back today. Tomorrow is a holiday. And day after, schools are shut. Trading activity, etc., is going to be a little thin through the course of this week. It's also summer markets and globally speaking, so volumes are lower, so price moves can be exaggerated. And in any case, as I began by saying, things globally are looking a little tricky. Let things resolve itself, and then I think we get the next leg, whichever direction it is. So keep these markers in mind in the very near term, and I think that will tell you what you want to do. Sit out if you are not sort of compelled to put in a trade or two. Let the market tell you what it wants to do, because we are entering a bit of a flux kind of a zone. The implied open is indicating a 80-point lower start. Rima.
Well, it's gotten worse, right? At about 7 o'clock, the implied open was down 55 points. And now it's extended the fall a bit. But just quickly, let's get you up to speed with the global headlines. Now, U.S. markets had a mixed finish. The Dow managed to close up in the green with a gain of about 0.3%, but the Nasdaq slipped. The Nasdaq was down 0.7%. That's the tech-heavy index, and it's posted 2 consecutive weekly losses for the first time this year in 2023. The inflation data coming out of the United States is a bit mixed. Last week, we told you how the CPI inflation positively surprised. Well, on Friday, we had the producer price index, which measures it at the factory. And that came in higher than what the street was anticipating, and that dented the sentiment a bit. The Chinese economic data continues to be weak. So over the weekend, we got the credit data out of China. And new loans in the month of July are the lowest that we've seen since 2009. So the economic data coming out of China continues to be gloomy. Last week, it was the inflation turning into disinflation. We also had the weak trade data. Now compounding the problems is the credit data out of China. The Indian macros, today at 5:30 p.m., India's CPI inflation print will be out. It's estimated to be a figure above, at the upper end, given the way prices have inched up. And plus, you've got the June IIP numbers, which the street will react to. It's coming in slightly lower than what the street was anticipating. In terms of flows, the FI sold about 3,000 crore in the cash market. The selling in the month of August has now hit 7,500 crore from the foreign, FIIs. And after buying in the Indian markets for 5 consecutive months, August has firmly been about FI selling in the cash market. The big earnings today will be ITC Divi's Laboratory, but with that, we'll mark the end of the earnings season.
Well, that's right, Rima. Great news, right? It's been quite a gruesome one. So end of earnings season. But how do I see trade set up today? Well, the dollar index is showing strength. I'm a little worried about that front, because all odds were that maybe we get past that 100 odd and we break down. But actually, we're seeing a bit of an up move, which is a little bit worrying from an India perspective. So that's point number one. Second factor is the domestic participation, well, for the next few days could be a little bit subdued. So just keep an eye out on volumes on that front. But how are the FIs positioned? Well, in the FNO market in particular, the index futures, well, the short positioning on the entire index futures is close to around 60% approximately. On Friday, they added shorts on the Nifty Bank. Close to around 4% open interest built up is what we saw on the short side from the FIs itself. So they're shorting the Nifty Bank in particular. On the Nifty, there wasn't too much movement. On the index option side as well, there's a bit of a bearish skew coming in there. And they're believing that the markets are not going to get past here, maybe the 19,600 odd mark, because they wrote calls and they wrote calls aggressively, more calls written than puts. Now, today is the Nifty Financial Services Index expiry. Normally, it's on Tuesday, but Tuesday we're shut. So today, that will play out as well. Which brings us to the Nifty Bank. The question is, the Nifty Bank has been weak. Now, which way is it going to swing? It's pat in the middle. Can it make a bit of a move towards the 50 DMA? As of now, the likelihood is more that it maybe slips down to around the 100 DMA, because it's been showing some weakness. So we're pat in the middle. We'll have to see how this moves. On Friday, in fact, we had the lowest close since the 26th of June. So the Nifty Bank clearly is the one that's seeing some pressure. Well, you've got a couple of strikes that are quite active as well that come up for you in the screen, the call as well as on the put side. So the range is on the downside, for the day at least. The 43,900 odd mark, you'll want to watch that on the downside. While on the upside, it's likely to see some bit of selling. But if you're looking for a number, well, that comes up for you on the screen. And I'm looking at the 43,900 mark on the downside, because the highest open interest is at around 44,000 put. So just keep an eye out on that one. Nifty, 2 strikes very active. 19,500 call, that was getting written in Friday's trading session. But on the downside, you got the 19,400 put as well that's fairly active, which brings us to 2 important levels. The 20 DMA, well, that's been a little bit elusive. We went there a couple of times. We couldn't get past that. But you have the 50 DMA. That's going to be crucial on the downside. So 19,250 to around 19,300 becomes a crucial support zone. That's the recent low as well as the 50 DMA. For starters, we pull back. Let's see how this goes. But otherwise, the Nifty Bank, that's the one to track. Can it have a bit of a relief rally is going to be the big question.
All right, we'll kind of pick up from there. That's the setup as you need to know it. Well, before we go any further, let's quickly tell you what's lined up here in the first half hour of the show today. We get you updates from markets around the globe. Mark Matthews of Bank Julius Baer and Company will join in to discuss the global setup. Our research team gets you the top 10 stocks to watch out for a little later after that. And Prakash Devan will talk about stocks and things he likes this morning as we start another day.
Let's get you some money market views then. On the rupee, B. Prasanna of ICICI Bank says US yields hardened. The dollar continued to strengthen after the US PPI data surprised on the upside. Risk-off sentiment and Chinese yuan depreciation on the back of weak economic data led Asian currencies weaker. The rupee traded with a depreciating bias near the upper band of 82 to 83 against the dollar. For this week, he expects the rupee to trade within 82.5 to 83 against the dollar, with the RBI protecting from sharp depreciation.
Okay, well, we got B. Prasanna weighing in on bonds. He says ICICI says that the US yields hardened last week as massive supply took its toll, taking global yields higher. Back home, MPC maintained status quo on rates, but increased cost of liquidity by introducing incremental CRR, which led to hardening of yields across the curve. He expects bond markets to remain under pressure with a 10-year benchmark yield trading in the 7.1 to 7.25 range.
Well, we have a lot of stock-specific action track for you, and we'll get to that in just a bit in our special Top 10 segment. For the time being, we run you through the list. We're looking at ABB India, ONGC, Glenmark Pharma, JSPL, NMDC, Muthoot Finance, and Nykaa. All of them will be reacting to results and positive news flow over the weekend. While on the flip side, you have Patanjali Foods, Amara Raja Batteries, and Voltas that we're tracking on the negative side.